This is Carl with the three things I'm watching for Friday, November the 21st. She's a pretty slow news day today, folks. But I do want to hit on a few things. Number one, and we touched on it yesterday, but I want to expand on it a little bit. The raw stock uncertainty and the delays to the incentives being removed, the proposed delays. Big reason for the sell-off we've had in the soy complex. Soybeans rallied pretty hard back when it was announced that those incentives would be removed. Not just soybeans, but the entire complex, obviously oil as well. Now without that, or that being, becoming uncertain, we're seeing a correction. But the energy market on a whole is weighing on commodities. Crude oil under heavy pressure here. OPEC looking like they're going to bump up production, and at the same time, we have U.S. gasoline demand has fallen considerably. Big build in U.S. gasoline stocks last week. So the thing is, the entire energy complex is really affecting commodities right now. It's not so much for the fundamentals on the actual corn, soybeans, not so much wheat. That's not really a renewable fuel stock, but corn and soybeans, they're starting to feel more pressure and more influence from the energy market. So when you see the heavy pressure in the grains, keep an eye on those energy values, but also the added uncertainty of these incentives is causing some panic in that complex. The second thing I'm watching today, and this is another big factor we've had in the market, is simple money flow. Money flow is one of the bigger reasons too that we've seen pressure in the market here. Um, Flow in and out. Commodities included in a basket. But we saw yesterday, I mean, look what's happening in the outside market. Bitcoin down 3%. Nvidia, good earnings yesterday. Value spiked 5% and then ended up trading 3% lower late in the day. A lot of uncertainty on these outside markets. A lot of uncertainty. There's been a lot of talk of an AI bubble. It's no secret that the Dow and the Nasdaq and the S&P all put in record highs, becoming a little bit maybe top heavy, a little overvalued there, due for a correction. The question is, does that cause pressure in the commodities or does it bring money to the commodities? Well, we got to wait and see a little bit. I'm going to go out on a limb and say maybe with the a more bullish or more friendly outlook to the commodities now that China is buying, if those outside markets starting to weaken a little more, we could see a little bit more buying in the commodities. Let's keep an eye on them. Soybeans is where I'd be putting my money. Look at them stocks to use. They're not getting bigger. Third and final thing today, after the close today, we do get the November 1st cattle on feed report going to come out. On feed number 98%. That's really not too much of a surprise, I guess. Let's look at the placements and the marketings for October. Marketings, both of them expected to come in around 92, 93%. Cattle values have been under pressure here lately because we have seen the same managed money leak out of that complex that we have grains and everything else. That's where we've seen the pressure there. Go back to cattle fundamentals though, and the bottom line is we do have a very, very tight U.S. beef supply. We've cut off our imports from Brazil. Argentina, I don't know what's going on with that mess down there, but nobody really even wants their beef. So that, leaves the U.S. as a major supply for the U.S. And bottom line is, until we can get these placements to increase, and I've hit on this, but we can't, when your placements are down, your cattle herd is not going to build. And yes, we have heavier weights on the fats coming in, but that's not the same. We need to get our placements back up 100 and, over 100%, 105% to really start to make a difference. It doesn't look like that's going to be this month, but bottom line is, even with the selling pressure we're seeing in cattle, them low inventory numbers should start to provide a little bit more support than they have. They've been a leading factor here, but until we see them build, selling likely going to be sporadic but limited. Those are the three things I'm watching today.